Okay, welcome to all our penny stock billionaires in the audience tonight for the Sunday chart chat, September 12th. We got Gilbert, who is officially made a big score. We saw the screen share, so up over $1 million Canadian dollars, but still, it's a nice little score just in the last couple of months, 12 months roughly. So things are looking good. Why say crash? Oh, we'll get into that. By the way, I'm not a doom and gloom guy. I don't like saying this. Oh, this is gonna be crash. I'm more like just a chart guy. So before I get into everything, just want to run a quick disclaimer. Nothing here is a recommendation to buy or sell securities. The opinions here are just opinions. This is not official company information. We're not, giving any kind of official company news, client news. Everything here should be considered a paid content as we are discussing clients of Wall Street Reporter, Octagon Media, etc. So take everything with a grain of salt. Don't believe anything you hear on this live stream. Do your own due diligence. Okay, so before we get into all the good news, there's a lot of amazing. Wow. There's like we have four charts that are looking like they're going to explode this week. A couple of others on deck, probably later in the week to next week. So things are really right now look very similar to almost like what we saw last this November, December. I mean, it's almost like identical. A lot of these charts, things look really like they're about to explode. But before we get into that, I'm going to kind of give you the big picture of what I think is happening. Let me take a quick drink of water first. Okay, so again, I'm not a doom and gloom guy. If I say market crash, yeah, it is good clickbait. It does get people to click. But from what I understand is that on YouTube, people like more positive. They like positive, happy talk, like things are going to the moon. They don't want to hear like any type of negativity. I guess it's like a millennial type of thing. Nobody wants to hear negativity. Everybody's all happy and cheerful. So, but if you recall, last November, anybody who's been watching this live stream for a while now, last November, mid-November, I was saying that, hey, markets are probably going to have a massive rally into January, and after January, things are probably going to, kind of go off the rails. We might have a big correction. I was saying after the inauguration. Because I'm looking kind of at the presidential cycle. There's a lot of things. One of them is the presidential cycle. Usually the first year of a U.S. president is usually a down year for a number of reasons. Plus the charts also. The chart was the main thing, but there's a bunch of other cyclical things. So, and of course, I was wrong. The crash didn't quite happen the way it was supposed to happen. Because the overall, the big indexes, Nasdaq, the Dow, everything went to new highs. Meanwhile, the micro caps peaked in Valentine's Day, right around February 15th into March, and they corrected by 50% or more, really 60% in a lot of cases. So a lot of these stocks that we're talking about right now rocketed, between November and December, rocketed, 5x, 50x, 5,000% in the case of CBDT, and everything started crashing right after Valentine's Day, and things are back to the bottom. So I think we're kind of having a very similar situation where these microcaps right now, very similar to what we saw last November, December. We have a bunch of stocks that are ready to explode, but the point of this is that you kind of want to start getting cautious here. in terms of initiating new positions and some things where you might want to take profits or take some risk off, because the market is getting into a little bit of a peaky type of a area. So here's what I got. I got a Nasdaq chart for you going back. It's a weekly chart going back to the 90s, right? A couple of interesting trend lines, right? So you got support resistance lines. I would say the main trend line, the one that I don't know if you can see it highlighted, the one that it's red right now, that's really kind of like your long-term trend, right? So that is really where the market should. So when the market does correct, that's probably where it should revert to, kind of this area. So that would mean roughly, usually things overcorrect. So maybe 7,500 to 9,500 on the Nasdaq. 7,500 if it overcorrects. It could be, again, things go more or less, whatever. You never, this is not an exact science. So here you have, it's pretty interesting. You have a major, this was actually a support and a resistance line. So originally this was the trend in the 90s, and you saw it acted as support into the 2000 correction or market crash, really. And now you follow that trend line, and pretty much it looks like we just kind of broke. I don't want to say broke out of it, because it's very easy to go above trend and then correct. So this is what I think is happening right now with the Nasdaq. So, but again, it might might go a little bit more. Who knows? I don't want to be one of these doom and gloom guys saying, hey, yeah, it's gonna. I don't know. There could be a lot of different things that can happen. There's the one thing that you do have to realize is there's a lot of indicators, a lot of things which kind of you want to be kind of cautious about. The market sentiment is just like there's a lot of crazy speculation. Super speculative. A lot of crazy speculation. Look, you don't have like the .com stocks today, like the Nasdaq stocks. In theory, all the hot stocks today. Generally they have revenues, they have earnings. Some have earnings. So it's not like what you had in the late 90s, 2000, when you had the pets.com. You had all those .com stocks which had nothing, right? But so what's replaced that .com thing is really the meme stocks, like the AMCs, the GameStops, all these things, which really these companies do have revenues, right? But they're completely overvalued by an order of massive. It's just insane. And you have these these guys on, what is it? Not Wall Street Bets. What's the Reddit? Whatever. Everybody's looking for the next crappy piece of shit company that next, this is going to be the next GameStop or whatever it is. So you have this massive level of speculation, and I'm not even talking about the cryptocurrencies. I'm not even talking about like Bitcoin, the shit coins, all that other stuff. That is pure speculation. Because there's no real underlying asset or anything else. So again, I know there's crypto fans, whatever, and again, I think crypto is a good trading vehicle, but you have a massive bubble right now. And again, I'm not the only guy saying it. So what is the thing to do? Very, very simple. Number one, any type of new stocks to get like, for example, when we introduce a new stock right now, like next super stock or what have you, it's got to be something which is, the chart has to be at a bottom. It's got to have like a double bottom. It's got to look like, I'll show you a couple of these charts. It's got to look like it's parabolic already, where we're hoping that it's going to double. It's got to be like very, very, it's got to be highly de-risked. I want things which are low risk. I want to see revenues. I want to have a margin of safety. I think it's very important. I think one of the reasons why our formula has worked, the next super stock formula, why have we had all these winners you see here? Cytodyne up 20 times, CBDT up 50 times, Peak FinTech up, pin baggers, and multiple stocks we've had. Even the losers we've had usually doubled before they crapped out, right? So what's really important is to have that margin of safety. So you get into a situation where you have a lot of catalysts for upside. Your downside is usually pretty limited, right? So when you have a flat chart, the downside is limited. Again, things which have gone already, like you see this angle of attack, this Nasdaq chart. I mean, that's what is that? Is that a 90 degree? I don't know. That steep angle. That's you can't you can't support that type of climb. It's like when when you're flying a plane, right? If you climb at too steep of an altitude, right? Let's say, I don't know, not a jet, let's say propeller plane, right? If you climb too steeply, you go to a very high angle, at some point the plane is gonna stall out, and then it's gonna start diving, right? Same thing happens here. It's basically physics. So the formula for success right now is only stocks which technically the charts look like they're bottoms, things which have, which are trading at a discount, a discount to the peer group. For even, let's say, a biotech, right? Let's say a biotech like Tetra Bio-Pharma. Tetra doesn't have revenues. They're going to have a little bit of revenues now, but they're trading at 20% of what their peers would be trading at with the same type of fundamentals that they have, right? Logic is trading at 2 times the revenues when their peers revenues, right? So that's where your margin of safety is. So most of the stocks we have right now, they're trading very, very at a discount to their peers. So that gives you your built-in margin of safety. I think it's very important when you're getting into these speculative stocks, and these are speculative stocks. Every one of the stocks that we talk about is speculation, right? You want to have margin of safety. You want to have things as de-risked as much as possible. And that's what makes these things work. We don't want to chase, we're not chasing momentum stocks. We're not chasing, meme stocks, none of that crazy stuff. So, so basically the idea is we want things now which are cheap, trading at a discount, things which are, trading at, fair value to peers, or stocks which are, charts that are extended, none of that stuff. So let's get into examples of stuff which is looking good. So again, I think the market at some point is going to start, probably crashing at some point. But these stocks that we're talking about right now, they have a lot of room to run, and it's very possible. We've seen it multiple times where, the overall market could be correcting, but penny stocks are making new highs. It's a weird thing. So, by the way, if you're just watching the video for the first time, click the subscribe button. Go to our website also and join our email list, wallstreetreporter.com. Okay, so let's do this. Let's start out with Visby. So this is the weekly chart. I'm going to look at the daily chart first. Okay. So Visby. So we introduced Visby last October, almost a year ago, 11 months ago. Stock was about 17 cents. Hit a high of a little bit over 90 cents. We had consolidation phase the last about 4 months, just like you saw with Peak Fintech, a couple of others. You got the consolidation, and again, just like I told you that Peak was going to break out of that $3, range because of the reverse. But usually, when you have that long consolidation, usually the stock could double, right, or more. I think what we're going to see with Visby is it's probably going to hit the $1.90 range this week. We're probably going to close in that range. Maybe next week. Things might take a little bit longer. And then I think we're going to break out to $2, $2.50 is my target on Visby. Probably it's going to take, so it's going to happen pretty quickly. Maybe even November. So it's going to happen pretty quick. Now take a look at this. This is the 1 hour chart. So what you saw on Friday, that big move, it's going to, from what this chart shows you, it means it's going to continue on Monday. So tomorrow we could be looking at a big move. Yes, I'm going to be going through all the charts. Yeah, definitely Fans is one of the big winners. Yeah, so I'm going to go through all the questions in just a second, but okay. So Visby is looking amazing. Amazing setup for Monday. Again, this chart, this pattern, you saw the same exact pattern with Relic, RHT, RQHTF. By the way, for all the Americans in the audience, I'm showing the Canadian symbols. The US symbol is VSBGF. The little thumbnail that you saw in the video, the thumbnail with the rockets, I have the US symbols there. So Visby is looking really good. I think we're going to see probably a double by November. I think we'll see $2, and from there it might even go to $3, possibly, before the end of the year. So things are looking very good for Visby. Now here's another Fans. Wow. Now trading charts of all time. It's one of these stock. It's like I've talked about this many times. This thing it usually does the opposite. So again, we introduced wow. So we introduced Fans back here. I think it was 22 cents. It hit over 225. So it was a 10 bagger, right? And of course that was mid-February, right? That was the big peak of the microcap market. It crashed, and we finally built a base. It took 6 months. 6 months to build this base. Now, I thought it was going to break out over here in June. I talked about this in the video, and it probably could have made a run. And of course, they did the financing, and that took the stock down. And here we are, which is actually great because now you have a much bigger base from which Fans could, launch a major rocket launch to not even Mars. It might be going to Venus, or something like that. Is looking good. We're definitely going to see. I have no doubt that we're going to see $2 again and above it. I think we're probably going to see $3.54. One of the big catalysts right now, one of the big tailwinds that's going to be pushing this thing is the boom in sports betting, iGaming, all that stuff. I think start. I mean, all the big betting stuff is going to be starting right now, and what's going to happen is you see everybody's going to be advertising in all the games, right? Everybody's running ads now, so you're going to see a lot of stocks, and Fans has some really unique technology assets that anybody that wants to get into the gaming space would want to own. Plus, they got all the games that they're doing. There's a lot of stuff there, which I think the market will appreciate and pay a lot of money for, potentially, right? So I think this thing is going to be, it's now. Let me look at can I look at the 1 week chart? Is there a weekly chart? Yeah, I mean, this thing is, it's probably I really wouldn't be surprised if it goes to $4 or above. Not at all. Again, once these stocks make a nice base and they break out of a consolidation, usually they double the previous number, right? You saw the same thing happen with Peak Fintech. I mean, I told you it happened, and it happened. It exceeded it. I mean, I think it's, after that, who knows what happens? But so this thing is looking really good. Let's see. Okay, Relic. Okay, so here's another one of our big runners. Now, again, we introduced this stock last year at 70 cents. It peaked in February. And we had, again, 6-month consolidation. You had a nice bottom here. It's breaking out. To give you a little, again, you know what? To give you a better context, I got to look at the U.S. chart because, there we go. Okay, so I'm showing you the U.S. chart because it's a little cleaner than the TSXV. Again, long term, meaning the next few months, I think we're going to see, probably $2.50, $3 on Relic, probably before December. We're going to see $2.50 on Relic or more. So this kind of shows you where this thing is going. Again, you're seeing higher highs, higher lows. So you've really had, in theory, a bull market since, really, I mean, the trend has been up really since November 2019, although it may not have felt like it, but you see what's happening. It keeps making those higher highs, but now it's really getting them. And again, we covered all the fundamentals multiple times. This thing is, this is a company that could be worth several $1 billion within the next 12 months. Again, the market is forward-looking. Again, I'll just cover it real quick. That's based on their revenues. They're going to hit a run rate of, they're saying, what, $2 million a month by December, right? So $25 million a year. The health tech space pays crazy multiples for companies, especially which have a big moat like these guys have, growing this rate. 40x, 50x, not a problem. So you could have $1 billion valuation, and it wouldn't be even halfway overpriced. So you got a lot of room for this thing to run. And of course, the revenue is going to start snowballing, right? So this thing is in a very, very good position. Fans are something big coming. It could be, what's amazing with Canada is these stocks, it's interesting. With Canadian stocks, for some reason, they always run right before big news announcements. Somehow the word gets out. I don't know how this works, but something always happens, right? $4. I think it can go to $4. It might take it, by January. It's very possible. I wouldn't be shocked. This is fun. I think we have. I think it's being. I think so. I think so. This is. I'll let you know when the check clears. Nothing is final until the check clears, right? But I think, I'm pretty sure they're going to be on board. I'd love them to be on board because this is really when there's a lot of exciting things in the pipeline, and I want to be able to amplify all that news. So once, I think it's very important that for a stock, once you have some news momentum going, you want to just push as far as you can, because that way, when it finally does settle, it settles at a higher price. I'll give you an example, like CBDT, right? I think CBDT, that thing went to 250, right? But if they did a couple things correctly, it could have settled at $1 instead of dropping to like 40 cents or whatever, and they could have raised money at $1, a lot of money. So, but whatever. So that's kind of my philosophy is, when you have something going, push it as, ride that momentum. So Relic, let's go back to Relic. I just want to cover the Relic thing here. Let me go to RHT. Okay, so let me go back to the Canadian shares right now, kind of tell you what's happening. So it's interesting. So what was happening till Thursday is you had this like pennant forming, right? And really, you see this. You see that it broke below the pennant, below that triangle. It was supposed to go the other way, right? So I was expecting it to go the other way, $1.20. Like Friday, it should have broken to $1.25, right? But it didn't. So I think what is going to happen is we're going to see a little bit of a pullback to probably possibly $1, possibly 90 cents. So let me show you this. So and that's actually would be a healthy pullback. Nothing to be scared of. Let me kind of show. Let me go to the daily. Let me show you what I'm talking about right here. So let me draw you a trend line. Actually, let me draw you a couple of trend lines. Okay, so you see that was a support resistance line, right? And that acted as a support. The stock pivoted off there. It acted as resistance right in the January time frame, right at the dollar range. Now it acts as resistance where the stock, it peaked above like this $1.25, and now it's going to come down a little bit, right? So let me give you another line. Oh, shit. No. What am I doing? Okay, so I think what's going to happen is the stock is probably going to bounce off of this trend line over here, and that's kind of where you have that's like a psychological level of support. Because $1 is the psychological level of support, what's going to happen is you're going to have short sellers, traders. They're going to test that, so they're going to probably push the stock below $1 to see if they can run some stops. So you're probably going to drop to like 90. Again, I'm not saying this is going to happen. I'm not. I'm just telling you kind of what it looks like from the chart. This is the type of thing that happens, right? So you're probably going to hit like $1 or maybe 90 cents, and from there you're going to consolidate a little bit, and that's when you can resume that uptrend, and you're going to have that massive move. So I would not be concerned if Relic pulled back. I would say that's not even an issue. So 90 cents $1 is probably where we might see a pullback to, and then we can see from there you're going to see that run to $2 plus, $2.50, probably by January. Excuse me, by December, maybe January. Maybe that was a Freudian slip. December is really my time frame. So yeah. Yes. Yeah. This is exactly the point. DraftKings, Penn, Score. Yeah. So listen, what's going to happen is you're going to have a lot of eyeballs on all these betting stocks, right? And again, investors want after stocks like Penn or DraftKings. Let me look at the DraftKings chart. after these things make massive runs, people want to get in on what's the next big winner, which one is cheap, especially when something is trading at like $1 or $2. That's cheap. I mean, psychologically speaking, right? So I'll tell you what I think is going to happen is, I think what's going to happen is DraftKings could go crazy. And let me pull up a former client, a former Wall Street reporter super stock, Fubo. That's right, Fubo. We introduced February, March 2020. It was about $8-9. Not a big run. I mean, after they did the merger with, it was known as what was the name of the company? It was, oh my God, I just went blank. It was a different name. Then they merged Fubo, so it's Fubo now. And look at this parabolic move again. These parabolic moves, they're not sustainable. When you see things going like this type of move, they're not sustainable. I mean, this looks like one of our charts from CBDT or whatever, right? Or anything which has big runs. There's no difference. Penny stocks or speculative big cap stocks, same thing, right? I think Fubo is going to make a big run, and which is good. And let me see, Penn. I haven't looked at Penn in a long time. Penn looks like it's probably gonna maybe pull back a little bit, but then the trend is up. The trend is up in a big way. This thing is not going down. I think we're going to see one more high on these gaming stocks. We're going to see the blow off top, probably by, it's going to take us into, I don't want to say December or January, maybe sooner. We're going to see a massive mania, FOMO mania. Yes, I think it will. I think Fubo, I think Tetra is going to have a big move the next couple of months. What was it saying? Yeah, so RHT. I think we're going to pull back a little bit, probably to that dollar range, and then we're going to see the new highs. And again, there's no question in my mind that we're going to see 250 Canadian on Relic by, I'm saying December. Might happen in November, might happen in January, but December is really the kind of the. Okay, so we got Fans, we got Relic. Okay, now let's cover the stocks which are like on deck right now. Again, so right now these 4 stocks, Visby, Fans, Relic, 3 stocks. These 3 guys are in the mode, and I think this week these stocks are going to go crazy, right? Now, behind them, we have a couple of others which are gearing up. They're like on the flight deck, like on a carrier. They're coming up, like on a carrier that they're playing them up, they're on the deck. So, so these guys have already taken off, right? So Visby is taking off, Fans is taking off. So now we got new ones coming up to the flight deck. So let's go through those right now for the next week. AIML. No, this is okay. So these trend lines are somehow they get carried over. I don't know how that happens with this thing here. Okay. So not a lot of data. Again, this is a relatively new chart, 6 months old. Well, actually, no, it's 9 months. 9 months old. So not a lot of data yet. We had like a pretty nice bottom at 50 cents, and the stock was ready to go to $1. It broke through this kind of resistance that 80-cent range. But it's pulled back. It wasn't able to maintain the momentum. So let's take a look at the 1 hour, what's going on here. Yeah, I think there's a little, there's a little bit of a weakness here, right? So see is you might see a bit of a pullback into this kind of 70-75 cent range, and then it could pivot off of that to go higher. So very possible to see a pullback. And from there, we could see a move higher. I think we're going to see $1.50, $2 AIML a couple of months in the next like 90 days, $1.50, $2 on this thing. So it basically, we introduced it at like 70 cents, 75 cents. It went to $1.57 or something. So it basically doubled in a week. I think it's going to double again, but it's going to take a little bit longer. We're in a different market environment. We're in a more, more of a serious market environment now. So things are taking a little bit longer. Oh, okay. So Sean Black, you say it's a TBP. I think if you listen to the interview with him, he says because he bought this other stock or something else. Oh, he bought Visby. He also bought Visby. So he bought, I guess, so much of it that, basically displaced, what he had sold it. He didn't say he sold it. It's just that he bought a lot of shares of Visby and I think one other deal, a lot of money. So that's how it happens. Okay, let's go to the next one here. Actually, let me see if I can. Should I answer a few questions? Okay, let me answer a couple of questions here, and then I'll go through a logic. So, hit the like button, exactly. Hit the like button. We need to get the algorithm going, the YouTube algorithm going. And also, if you're watching this video afterward, sometime, I don't know, you're watching this tomorrow or whatever it is, make sure, leave comments in the video below. It helps, I think, the algorithm because it shows engagement, right? So we got to do whatever we can here. And also, let me just banners. We're also on Discord. We're on Telegram, and we have an email. So if you want to join those, to our Discord channel, it's free. It's in the video description below. And of course, if you go to wallstreetreporter.com, you get the latest news videos, and you can sign up for our email list, which is very valuable. By the way, our Telegram channel is where we have a lot of comments day, right when things are breaking out. They're posted on Twitter. So if you want to get it first, join the Telegram channel. That's where we post things first. Okay, and again, if you're okay. Let's go through a couple of questions, and then I'll go get back to the charts. Yeah, the Visby chart is mega bullish. Yes, is basically the money's going to go to the micro caps, the small caps. This is, I think, what's going to happen is that's what's going to happen. Parabolic. Yeah, Visby definitely in ready to go parabolic. So Russell, yeah. So I think this kind of ties in. I mean, what you're saying, Lewis, is kind of what I'm thinking here. I mean, that kind of explains the paradox here, right? Because the overall market, like the Nasdaq chart I was showing earlier, I'm not saying it looks toppy. It looks very toppy, right? So how can you have a big market correction in the big cap, in the Nasdaq, whatever, and have these stocks have these stocks like Visby, stocks like Fans. These things look like they're like, like rockets. Elon Musk, Saturn, right? Exactly from what you're saying. This, I guess that's how it works, right? I'm just reading the chart. I don't know the fundamentals. Um, hmm. I don't know. That's a question is above my pay scale. I'm just a simple penny stock guy. I'm just looking at big charts. Fans after Friday's breakout, I think this is the big move. This is the Fans. What we're seeing now is the big one. This is it. Fans charts have a lot of fake outs, right? It's like tomorrow it might drop 10 cents. It might do something crazy. But this, I really believe this is it. You're gonna know it's for real once it goes above $1. Once Fans breaks $1, it's not gonna go back. So once it breaks $1, you're gonna see, like a rocket to $1.50, then $2. I mean, look how fast. The last time it broke $1, actually it's interesting. Every time the stock has broken $1, it had a really nice run. So yeah, it would be very easy for this thing to be $2, $2.50, like in a blink of an eye. Yeah, I think that could be a catalyst. I mean, that could be a catalyst. I mean, we've seen a lot of crazy deals happening in this. It's possible that somebody might pay, I don't know, $2 or something for Fans, get it cheap right here. I don't know. But they also, again, like you're saying, they've raised a lot of money. They're sitting on, I don't know, 35, 40 million, I think, right? 35 million plus. So they could do, they could be doing some big acquisitions. The chart looks good. This is not a stock that looks like it's going down by any means. Okay, TBP. I'm going to go through the TBP. If everything goes through, meaning what? If everything gets approved, I'm not sure what the question is. I'm not sure I understand the question. I mean, the stock really could be easily worth, $2 right now, based on what they have, based on what development companies trade at with similar drug pipelines, similar, FDA pipelines, things that are in phase 2, etc. It could easily be $2. So why is it here? I think that represents the opportunity. Look, it's will represent the opportunity. Only happens when people don't like something, or this when everybody's chasing it, then the opportunity's gone. The stock is up, right? So nobody likes it. I don't mean, obviously we like it and some people like it, but the market hasn't caught on to Tetra Bio-Pharma. That's the idea. Yeah. I think, again, okay. So I think you're asking when they start. Once they get drugs approved, once they have things already generating revenues. Yeah, I mean, then by then it could be a $10 stock. It might take 12 months, 18 months. So but there's no reason why it can't be $10. I mean, even $20. If you get into like a $4 or $5 billion valuation, if everything works, it could go crazy like that. It could, but realistically, I think. And if they really, really do everything correctly, and they get into revenues, you could see a $10 stock in 12 months, 18 months. So the way I look at TBP, I'm going to go. I should pull the TBP chart. So the way I look at it is that it's an asymmetrical setup. This is okay. So this wrong chart. is asymmetric risk reward ratio, right? Asymmetrical. It's not a 1-for-1. It's not like you're betting $1 to make $2. This is what I don't understand. Like, people are like so into sports betting, which I don't understand. Like, I think because you're betting $1 or whatever it is to make $2 if a team wins, or to make $1. I mean, the whole thing is ridiculous to me. I mean, if I'm going to bet and have a possibility of 100% loss, I want to have odds where I'm betting $1 and my upside is, $10, $100, right? Otherwise, it's just stupid. Again, of course, we do have clients that are in the sports betting and the iGaming business, so ignore what I said. Everybody should be betting on sports. No, I'm kidding. All right, so asymmetric, what do I mean? So we introduced this at 17 cents. It hit a high of over 50 cents in less than a month, right? So asymmetric is you're betting 17 cents to make possibly, let's call it 250. I think 250 is kind of where the stock could be if they get a couple of, so that's a 10 to 1. That's a 10 to 1 or 15 to 1 payoff. It's actually better because if you look at the long-term chart of Tetra, it never really went below 15 cents. So if you got into the stock at 17 cents or 28, right here, it's never really been below 15 cents. So that's really the bottom. So if you got into it at 17, 2 cents to make 250, 100 to 1 payoff. It's pretty good. So that's the kind of thing we're looking for. Okay, so the Tetra chart, it looks like, okay, so we could have had a breakout here, but I think it's probably gonna kind of consolidate in this 28 to 30 cent range for a little bit. It's looking for a catalyst. It's looking for some data, all right, some clinical data, some news, which, like the stock, it doesn't look like it wants to go down. It might test 27, like it might go to 27. It might even go to 25 cents. I don't think it's going to go lower. So it might go to 25 just to get the last, the last retail people out of it. But after that, I think prices, again, what you're looking at here, this is the short-term 1-hour chart. You're seeing a consolidation, very similar to the earlier charts I showed you. It's almost like peak fintech or anything else, right? The longer they consolidate, the bigger the breakout. So I think when it breaks out of this range, when Tetra breaks out of here, it's going to go to north of $1. I think it's going to go to probably $1.25, $1.25, $1.50. I think $1.25. So if you're getting into the stock right here, I would look at it this way. If you get it, I would say you're basically risking a nickel because it could go to 25, 20, whatever. So you're risking 5 cents to make, let's say it goes to $1.25. So that's $1, 20 to 1 payoff. I mean, those are pretty good odds, I think. I think those are pretty good odds. Yeah, okay, so okay, now we're down. Okay, so ESC, this is exactly what I would say. So ESC is not, it's like the elevator is bringing the jet up. It's like that one of those things on YouTube. If you see the thing for Top Gun, the trailer for Top Gun, the plane's going up on the deck from the aircraft carrier to the deck. Music playing as the plane is coming up to the deck. So to the flight deck. So ESE is coming up to the deck. It's not on the deck yet. It's just underneath it. When is it going to be on the deck and when is it going to take off? Could be any day. It's a stock we introduced last December, early December, at it was 27 cents, I think, or 30 cents. It went to over $4, so it was like a 14x, 1,400%. So if you bought worth of this, you'd have had $140,000 within a few months, within 3 months. So what's going on? It's building a base. It's, again, if you look at, it's the same old story. Now, how long is it? It's due. This thing is due. It's like, it's due. It's like a pregnant woman at like 9 months. I don't know. Is it 9 months? Is it 8 months and 25 days? 9 months and 40? You don't know, but the baby's gonna pop out, right? So this same thing is gonna happen over here. This thing is gonna. The question is, when is it gonna be, right? So you got a couple of trend lines here, right? So this is kind of, I think, the main one, and you're below it. You're below that main trend line, which I don't like to see that happen, but a little bit of leeway because it's been hanging out there. So that means that I think it's pretty safe. And I think once it goes above $1.25, that's kind of the deck. So that's when the plane is on deck. When you see this thing hit $1.18, $1.10, let's say $1.10. When you see ESC hit $1.10, attention. $1.15, $1.25. Once it's $1.25, that means it's taking off. So that could happen any minute. And where is it going to go? I think we could see some crazy numbers. I mean, I think we could see dollars based on kind of the way these things work. When you have long-term trends, consolidation, and breakouts. So I think we could see $6 or $8 on the stock. That wouldn't be crazy. I know it doesn't make sense right now. But the chart, I mean, listen, any chart we've gone through, when I said, hey, this is what it looks like, and then when it hit it, it didn't make sense at the time, but that's the way these charts work. They're telling you the future in advance, or the future possibilities in advance. This is an interesting question, right? Because I think the theory now is that crypto is the new gold, right? Because what you've been seeing in the last year is volatility or anything. You have seen people buy, you've seen Bitcoin go up and gold didn't budge. And today, okay, so now you have a huge population. Okay, so the biggest population right now in the US, the most active really is, right? So the baby boomers are kind of on the way out, right? Those are traditional people who bought gold. So the thing, who's moving, who at the margin is the millennials. Really, the millennials are the driving force of markets right now, right? So that's who's driving meme stocks. The people who are buying meme stocks are not, the boomers. They're not the 70-year-olds. I don't think it's even the 50-year-olds. I don't think it's the Gen X or 40-year. I think it's primarily, 25-year-olds, 30 maximum, right? So that's what's driving the market. Now, here's what's interesting. The millennials have really rough bear market. Like what we saw last, the coronavirus crash, March 2020, that was nothing. I mean, I don't think anybody who's 25 and never saw a market like 2008, you know, where 2008, 9, where things are just going 5%, dropping 3, 4, 5% a day for a week or something like that, 2%, things or like melt out. So, you know, you're going to have it's interesting to see what happens, right? And that's, you know, you have a lot of money. All the speculative money is, you know, the millennial generation, right? So they're the ones buying Bitcoin. You know, Bitcoin could be the thing that takes down the financial system. It could very easily happen. I mean, you got a couple things that could happen. I mean, I don't want to be one of these like conspiracy theorist guys, but you got a couple of potential black swans, right? You got the crypto thing is one, right? There's a lot of opaque stuff between these exchanges. You know, it's all based on confidence, right? It's all based on confidence in the market. And when people panic, I mean, this, you know, when people all of a sudden realize, wow, the emperor has no clothes, and this thing is all just, you know, hot air. I mean, the thing can just go to, you know, straight down, like, you know, go to $1,000 and then back to zero, whatever it is. Again, I'm not a the charts, whatever. The thing that worries me is that you have El Salvador, I think, adopted Bitcoin as a currency. That to me is like contrarian indicator, man. I mean, that's not exactly you know, the most sophisticated country. It's not like, I mean, I don't know, like Sweden, or, you know, if one of those guys, you know, one of these like a Sweden or somebody like that adopted Bitcoin, or Iceland, okay, I get it, kind of, you know, whatever, you know, they're into like, you know, avant-garde type stuff. But, you know, El Salvador, I mean, you know, I think it's very dangerous. I mean, it could be a really tragic situation, because, I mean, it's a very poor country. I mean, you know, I mean, people there could starve. I mean, that's like, it could be, you know, it could be very tragic. So, yeah, I don't know, man. So crypto, I think, is the real hedge. That's what it is right now. But I think if people lose confidence, you could just, you know, potential black swan is China. I'm not talking about the military stuff, but the economic situation. Like you have a company, you know, there's a company I just read about, the China Evergrande, the real estate developer. I think they have like $300 billion in debt, which is kind of what is it? I think they're defaulting on it basically. I don't know, you know, is the government going to bail them out? I mean, I have a feeling that this guy, what's his name, the guy who's running the country, you know, he basically would let things drop because he wants to wipe out the billionaire class, or even the multi-million. He would rather see the country, what do you call it? More, you know, more middle class, a little more even distribution of wealth. He would love to see a lot of billionaires, or you know, get wiped out. He would love to see that happen. So I don't think it's going to be. I think we're probably going to see like a, you know, it could drop 50%, right? It's not a big number, 50. If Nasdaq drops 50%, that's really nothing. That's like a correction. I'm not saying I'm not like a doom and gloom guy saying, oh, the world is coming to an end. I don't think any of that is going to happen. I mean, listen, I think right now we got a lot of great technologies and a lot of great things. So, you know, the long-term picture, things are looking great. I mean, could be a little bit shaky for a year or so, you know. Okay, so this is a interesting point. Yeah, so TBP could be worth massive numbers, you know, if they deliver the data, right? So if they deliver massive market opportunity. Look, this is what I like about TBP. This is my investment thesis. So the investment thesis on TBP is, for me, was basically, okay, they got this pipeline. It could be worth billions of dollars. They're already in phase 2 on a couple things which address massive markets. You got the off-label use for those things. I mean, these are massive 70 billion, 50 billion, $100 billion markets, right? So, you know, it could pop, right? So when you're getting into something like that at a cheap valuation where Tetra is right now, let me go to TBP, back to TBP, since we're talking about TBP. What is this? I don't know how these things happen here. Yeah, okay. So this is the daily, right? I think that 28 cents, 25 cents, whatever it is a cheap entry point. If you're looking at something potentially, if everything lines up, it could be $10 stock. If things just get pretty good, it could be $2.50. But the intermediate target, $1.25 easily. There's a lot of catalysts. Sorry about that. I had your thing. Okay. So there's a lot of catalysts lined up here. Again, I'm not saying it's going to drop. I'm saying it could pull back. It looks like it's going to pull back a little bit. So the trick is, though, for people, like everybody says, they're going to buy the dip, they're going to buy the pullback, and when things do pull back, that's when it's difficult. People get scared, right? So let's see. I get a lot of peak holders. So listen, peak example of what I said, when things go parabolic and when things get a little bit crazy, you're talking about $1.5 billion market cap. That's a lot of money, right, for a business that's saying they're going to hit a run rate of 100 million. That's okay if you're maybe on Nasdaq, whatever, and like you have real institutional support and have like earnings, right? I like things which are cheap in comparison to the comps. At 10x, that's not cheap anymore. That becomes like a fully valued. You got to be an institutional quality stock to command that type of valuation, to be able to sustain that. You can hit it, but to sustain it, you got to have real earnings. So to me, peak is pretty much, the upside is not worth the downside. I mean, it could go maybe a little bit higher, but the downside, shit, if short sellers come out of the woodwork, it could drop like a stone, right? So to me, it's not a good risk reward ratio anymore. When it's trading at 2 times revenues, 5 times revenue, when you get to 10, 15, include me out, that's, and again, okay, so we're looking for the asymmetric. I like things which are asymmetric setups where you're betting $10. Peak, what is it, $12 now? What is it going to go to? It's going to go to $100. I don't think, we've seen this times, right? We've seen this, all these the tickers you see scrolling there. Imagine AR, Nextech, Cytodyne, CBDT. Things pop when they go up 20x, 15x even. It's very difficult to go from do another 10 bagger from there. It doesn't happen. So I like things which haven't gone yet. I like things which are basement, ground floor opportunities. A basement opportunity like FansUnite. Here, this is a stock that's in the basement. Not anymore. Really, the basement would have been 27 cents, but close enough, right? Because even here, where is it going to go, right? So you're seeing that it's been able to sustain this level here. So your downside, I think, 60. Actually, it's already moving, so it's hard to say. But this again, you're talking about a $3-4 upside or more. this to me, this is a chart that shows big upside. Okay. This is a chart that shows big upside. Well, I think we're going to see at least 250 once it breaks out, $3 plus once the FOMO starts kicking in. So, okay, let's go to, okay, so Logic. So Logic is a we introduced last year at last July, so 13 months ago at 350. It popped to 14. So that was a 4x, 5x, pulled back, double bottom. Here we are. For some perspective, where the stock has been, right? And those are split, whatever, but it gives you the idea, right? I always believe a stock can go back to its previous highs. If it did it before, you got two targets. Target number one, $14, $15. That's target number. That's my immediate target. Next 3, 4, 5 months. 3 to 5 months. Excuse me. After that, $20 plus. So you're getting into this thing at, let's say, 350. This is so Logic trades in the US, LGIQ, and also in Canada on the NEO LGIQ. The downside on the stock, I think here that we haven't seen this thing go below 238 here, really, right? So let's call 250, 225, 250. Let's say 250 for argument's sake. So you're risking a buck, you're risking $1, and your upside, if things work out here, as it looks like they will, is 14 to 15. So you got a 14 to 15 payoff. And if it really continues, then it's 20 to 1. So you get a 15 to 1 odds. I mean, I think that's a good setup. That's what I call an asymmetrical upside. Yes, I am. Yeah, so click on our, by the way, yeah, if you want to join our Telegram and our Twitter, the link is in the video description below, like this guy is saying. We've had a lot of good stuff on there. Yeah, I think Scarlett is actually, I think it might do okay. Yeah, I'm a little bit irritated with the company, but I think it's going to do okay. We might have one. We got a couple things. I got a couple things I'm looking at. So which have that good setup, that good asymmetric 10 to 1 odds. We're going to introduce probably in the next couple of weeks. I want to keep things a little bit tight. I don't want to have 20 stocks like we had in March. I don't want to have more than 10 stocks in the next super stock thing, right? Like I want things that are cheap, near bottoms with big upside. Relic goes to 250. I think it'll go to 350. Things always get overextended, right? I think with these stocks, I think especially with something like Relic, with this type of market, I think once it gets moving, it's going to get overextended. Like the FOMO is going to take it to crazy heights, because when they show 2 million a month in run rate, when they show those numbers, people are going to wake up. They're going to take it, wow, these guys are serious. What they've been saying all along is true. Now they're going to start extrapolating. And that's what is going to move the stock. Once people see Relic deliver those numbers, they're going to extrapolate the growth for the next 18 months. They're going to say, wow, their projections are actually true. So then, the company, what normally in 18 to 24 months, gets pulled forward. So it could go to $2 billion. Relic could go to $2 billion valuation. If they hit 5 million a month revenues, let's say by next June, revenue run rate, the market's going to extrapolate 40-50x multiple, 2.5 billion. Stock is going to go bananas. It's going to be what is it? It's going to be it'll be $4 or $5 easily. So and then of course it's going to pull back. It'll correct 50%, build a base, and then go. Same idea. I think I answered the question earlier. So I think it's in the short term, I think we're looking at $1.25 to $2.50, and if they really deliver, $10 by next year. Let's see here. Let me pull up Skylight. I'm really irritated with these. Okay, so because technically I got shares now, and I'd love to sell this thing out of it on the next big move. I'm just being very, very candid. So this could have. I think we may have seen the bottom on Skylight, because if you look at this big volume, we haven't seen this type of big volume in a long time. So something must be up, and this could have been the bottom right here. Probably, you kind of have. I don't know. I don't want to do backwards. So if you go back, that kind of makes sense. So that kind of makes sense. It kind of went above that level. So we may have bottomed out here. Sure, once it breaks 4.25, it's got to go above really 435. Once this thing breaks above $5, and then again, and Sean thinks it's going to go to $10. I would love for it to go to $10 and dump all my shares. So I think we may have bottomed out, and we could see, what is it? It hit with the split 9.25. So yeah, why not? You could easily go back to 9.25 from here, $10 by the end of the year. From your mouth to God's ear. Okay, so a couple things coming up right now, which I think could be 10 baggers, but easily 2 baggers, easily double, triple type deals, easily. So listen, so just what I should tell you is this, is in the current market environment, right, where things are getting, when you see gains, it's like the stuff which, you're getting these 10 baggers in 4 months. I don't think we're going to see 10 baggers in 4 months like we saw, last year. I think it's going to take us, I think it's going to be I think 10 baggers are going to take a year basically at this point, which is the normal. 10 months is the normal amount of time it should happen. So I think we're going to see triples, quadruples within weeks, within a month. But 10 baggers are going to take 10 months. Let's see here. Yeah, it really does. Yeah, it does need to move. So logic, we got to wait to see what happens. It could start moving What is blow up? Is that in the way of going up? I think it will go up. Yeah. Right now, these penny stocks are gonna make highs in the next few months. So, regardless of the overall market direction, because again, you're gonna see a rotation back into the micro caps, into kind of the speculative. It doesn't make any sense. Let me go back to the ESC chart. Yeah, look, you have this blue. It's looking for a catalyst to go up, so it's not going down, right? I think the stock lost momentum when they did that financing. That kind of pushed things, kind of derailed it for a while. So now things are going to start moving back on track. You want to watch again, $1.25. Once it goes above that, you're going to see a move towards potentially $4. Oh, I really can't smoke the cigars when I do these live streams because it's very difficult to smoke and talk at the same time. It's actually it takes yeah, I mean, or I can't talk at the same pace. It's yeah, it's not the same. Maybe we'll see. We'll see. Yeah, Kevin, good point. Good point. I was saying I'm going to have stocks, and and then we went to 20. Now you do realize that the sweet spot is that 8 to 12. Once we went beyond that, that's when things, let's just say the underwriting standards got a little bit sloppy, because it is like, you know what it is. Look, there was a couple stocks I took on where the investment thesis was like GBLC. Okay, case in point, right? The investment thesis there was, okay, Bitcoin is moving, it's going to be riding a big theme. And I really thought that Bitcoin at the last, I think back in last November, December, I was saying, hey, I think Bitcoin is going to go to 100,000 this year, right? The next, by May, maybe. And I'm not a Bitcoin fan by any means, as if you were watching earlier. I hate Bitcoin, right? Or any of this crypto shit, right? So the thesis was, okay, if Bitcoin goes to 100,000, anything related to crypto, these stocks are gonna, go bananas. So with the GBLC, I thought that if Bitcoin went to 100,000 or even 80,000, that stock could have quadrupled easily, just based on the hype. That basically, that's not enough to, for our next super stock thing. Actually, I think they were introduced as a Discovery Day stock. So let me be clear. We have fine line. We have that Discovery Day stocks, which is not as the same thing as, at this point, we're only doing next super stocks, except for stuff which is mining related, because mining is just too crazy. Mining is there's no underlying business, right? By mining, I mean exploration, not actual mining. So, great question. No, but I mean, it's been halted for you. It's almost 5 months, 4 or 5 months. Should be like any moment. I mean, the sooner the better, because betting is heating up right now. So they got to do something. Either they close this deal, or or they move on. It's ridiculous. Let's see. You know what? Here's my theory with CBDT is this, is at this point, they need to deliver, okay, before it could move. So they really need to execute at this point, like meaning, if they actually open six, 8 clinics, where they could say, okay, I think that'll get people interested, but they really need, I mean, what is that? I don't even want to look at that. It's not, they're not a client at this point. So yeah, I mean, look, they would need, because there's so much hype built into it still. And they didn't deliver as fast as they were supposed to, right? So it's like, I mean, they would need to be doing 50 million revenues, 25 million, not even 20, 50 million revenues. I don't want to hear anything. I don't want to hear about CBDT unless let's say 25. Just I don't want to hear about CBDT unless they're doing 25 million revenues. Otherwise, it's thing's not worth it, right? 25 million they gotta have. Yeah. Yeah, I don't want to knock Bitcoin. Again, I think it's a good trading thing, like whatever trading wise, but there's really, I don't know there's nothing underlying these things. But the illusion has become real. It's amazing. But yeah, hey, maybe I'm the idiot. Maybe 10 years from now, it's gonna be, something crazy. It'll be like $1 billion or whatever it'll be. I don't know. Okay, so I think we've covered everything. Bottom line is, these stocks are looking very good. We got for this week, we got Visby looking great. We got fans looking amazing. RHT, maybe a little bit of a pullback, and then the big move, TBP. So we got Logic, AIML, ESE. So things are looking very good for the next 4 months. So the game plan is next 4 months is, manage your risk. Don't chase things when they're already going into full momentum mode. That's the idea. So thank you everybody for joining, and I will see you on the next live stream. We have ESC is going to be back on Friday. We might have a very unique live stream in the morning from a trade show in Europe. So that could be interesting. And then we got a couple other things in the hopper. So thank you again, and I'll see you in the next live stream.